Welcome to the Captain's Blog. I'm David McDonough, Senior Vice President at Trilogy Financial. On this blog, we try to take what's unnecessarily complicated on Wall Street, make it understandable to you on Main Street. You don't have to adjust your screens out there, folks. We're not having technical difficulties, but our Emmy Award-winning producer, Dave Cullinane, is at his beach house, so I'm left to my own devices. And speaking of your own devices, the market last week totally forgot, ignored inflation numbers, the war back on. What it is paying attention to is financials, earnings reports. Is this market level justified with earnings? Well, at the end of last week, it was the haves and the have-nots. Tech stocks taking it on the chin, the financials, healthcare, all in positive territory. Did that continue this week? Here's your week in review. It did continue this week. What do I mean? The haves and the have-nots, financials, healthcare, consumer staples, all in positive territory. But what wasn't? Tech stocks. Average tech stock is down 20% from its high. Look at SpaceX. How's that working out for you out there, folks? The hype names are taking it on the chin, but what isn't, again, are the financials, the boring name, the value names. Again, stay diversified. Where have you heard that before? Right here on this very blog. So the broader market, the S&P 500, as of this closing today on Friday, it's going to be down 1.5% to 2%. You'll see headlines, the global rout where it comes to tech stocks. It's not a rout, folks. It's profit taking, and quite frankly, it's overdue. And here's what to look for next week. So again, it's all about earnings reports. Again, we heard from healthcare and financials. Next week, we start to hear from tech companies. And I talked about pre-announcements over the few previous, blogs, talking about pre-announcements, confessing your sins. IBM confessed their sins last week, and the stock plummeted, its worst day in 40 years. It goes to show you, folks, you can't have all your eggs in one basket. Take this weekend as an opportunity to evaluate your risk tolerance. Am I overweight in certain sectors? Should I rebalance? And the answer to that question is absolutely yes. We also have a Fed meeting next week. I do not believe that they're going to raise interest rates in July nor August. The market is predicting September. You can remember this very blog. I don't believe that to be the case. Again, an apolitical environment at the Fed is going to be political. And I do not believe that this market is pricing in the fact that Fed hikes won't come in, and this market will be undervalued and higher by the end of the year. Now, here's your personal finance tip of the week. Yes, sometimes I do repeat myself, and you out there at Captain's Blog Bingo, you're ready for this one. Ready? Short-term money should not be in this market. Use this weekend as an opportunity. Hey, if I've got an expense in the next 3 to 6 months, maybe now is a good time to take it out. Don't have it invested in the market. As I just mentioned, some of these tech names are down 30, 40% in a week. Short-term money needs to be at the bank, high-yield money markets, CDs, and not in the stock market. So thank you all for checking in. We'll see you next week on the Captain's Blog.